Good afternoon, all. CamelbackTrading.org coming to you this Friday afternoon, April 29th, and not a good finish at all for the Bulls this week and for the month. Horrendous way to start the second quarter. Somebody in my room put up a stat that this is the worst start to a year ever in the NASDAQ's history. So that's interesting. Last week we were down just under $12. This week we're down, depending on where they have us settling, around $15. Tremendous volume in M period. We did about 32 million shares, not including the close and print, which I think was about 5 million. So almost 37 million shares in M, about 130 million on the day so far. Tremendous range again for the fourth month in a row. Our average volume is 110 million through 4 months. We can't, again, volume, right? Volume and volatility. Well, as traders, you can't complain at all what we've had so far this year. SPYs, the bell, basically SPY was saved by the bell from taking out February's low and attempting to come out of a 3-month balance to the downside. Russell and Qs are now down in the monthly. They are down. We are still in balance. We have 2 monthly lows now very close together. Now, I can assure you, everybody is looking for this thing to gap lower Monday, and it very well might. But just keep in mind, even though we came out of a 5-day balance to the downside, this market's been incredibly erratic all week. Up and down all over the place. Okay? We still have the Fed Wednesday. These are very, very fragile traders. I think it's the best way to put these short-term traders. They are so skittish and fidgety, and they just run at the sight of anything. Now, could this be the start of a pretty big down move? Of course it could. Look, Russell and NQ are in bear territory. We're not even close to bear territory, the S&P. We got to get to 384 in the SPY. We got to 410.64 in February. So we're still $26 from even going bear in the S&P 500. So are we going to follow the Russell and the Qs? Or are we the leaders and we're holding up the best? It remains to be seen. I can tell you what, I've been beating the drum saying these monthly lows, by Wednesday we're going to have a good determination if this market's really in for a bashing, or if they're going to rebound off these monthly lows. I still kind of feel that way, but the way this market's acting, especially today, we'll see if they want to have a further down movement Monday, Tuesday, and even part of Wednesday before the Fed even announces. Unlike yesterday, I'm very proud of how I traded today. Yesterday, again, no trade is a trade also. I told you I didn't do anything on the long side here yesterday. I was fine with it. Well, guess what? Today I did a lot on the short side. So very, very happy. I mean, I had a lot of trades. I'm not going to even go over all of them because it's not worth it. The market told, by the way, we have a poor high today. That's another thing that's pretty fascinating. We made a high, so we took back. This is what's incredible. So there's no rhyme or reason why they ripped high yesterday except to cover shorts and for momentum buying before Amazon and Apple earnings come out. Amazon and Apple earnings come out, and down we go. Right? I said if Amazon and Apple were pretty good, I think we have a chance to even go test the 437 level. Well, obviously, they didn't like Amazon and Apple's earnings. I said if that's the case and we take back today, well, then that's off the table. So where do we open today? We open right in between the two distributions. Take back the entire trend day in A. Now, I did say to the room, I thought we might trade in between the two distributions for a while. That did not turn out to be the case. B took out A's low, got acceptance. What is acceptance? Well, not only did we one time frame down, look at C's high. We never came close to F's high, which is the top of the lower distribution. That, my friend, is acceptance. And once we had that, I looked for nothing but shorts the entire day. I actually took a long in D to pop the top to alleviate some of the... no, that wasn't D. No, I didn't take it. I'm sorry. I did not do that. I shorted. I was short. C, D, E, H, you name it, I shorted it. In fact, E period, I came within about 10, 15 cents as we were getting up to the 144. I had 40 puts. I was going to put on another 50, and then it rolled over before it got right to my level. The long I did take was an innovator play in H. I thought we would finally pop G's high, stop the one-time framing, and get some kind of push up. And that's when I took an innovator play of the 419 calls. But other than that, nothing but put plays. I had a 45 lot play. I had a 50 lot play. So, and it wasn't 50 in one shot. It was when it went up, and I added to them a couple of times. And then on every ebb and flow, every push up, right? Every push up just started shorting it. Every push up, I shorted it. The one other long I took was a 5 lot at our 5-day balance low. When we got to 415 level, took a 5 lot. It went up. I made like 20 cents on it, 25 cents. That's it. It was a visual level. Other than that, it was looked for shorts all day. As far as destinations, please write all these down. I'll give you all the upsides from today, and then I'll give you a bunch of downside, which I won't repeat on Monday, because I want to go over all these charts too. 413.90, L's low, price probe. We price probe every day. I mean, it might be higher than 75% of the time how much we price probe. It's amazing. So 413.90. Then we have our first set of single prints. We went out with a triple distribution day. So the way yesterday was a double distribution day, today's a triple. So we're going to treat this as 3 separate days. L's high to the day's low. J's low. I'm sorry, wait, where's my... Yeah, wait. L's high to the day's... Is it L's high? Yep, L's high to the day's low. And then the second... G's low to E's high, and then A's low to the day's high. That's our triple distribution. Single print start at 415.75, get filled at 416.52. L's low to J's, L's high to J's low. 417.05, get filled at 21 cents. That's K's high to G's low. And then our afternoon rally high in I, and that's a textbook afternoon rally high, single prints above, single prints below, of 419.78. Single prints E's high, 422.14, get filled at 422.57, A's low. Today's high at 425.87, poor high. And then don't forget, yesterday's high is now a weekly high, 429.64. For the downside, 411.21, today's low is now a monthly low. Then we have February's low, 410.64, monthly low, yearly low. So our monthly lows are within 57 cents of each other. That's a 3-month balance low. We'll see if ours is going to hold. Russell and Q's certainly didn't. That's the only reference points we have for 2022. Now, the ones I'm going to give you are from 2021. 410.56 price probe for May 19th. 407.59. 407.59 afternoon pullback low for May 19th. 405.33 weekly low. 404.79 monthly low. That will be our next big destination if we get below that 410.64. And then single prints, 404.78 get filled at 63. And then I'm going to give you one more. 403.38 weekly low, filling a very large gap at 400.67. 271 point gap from April 5th. Now, let's go to all the charts. This is, I love this when the market moves like this. It gives you multiple opportunities. You know, I'm trying to tell the room, like, and even for myself, a lot of people are like, man, if I had held that short, I could have been up this much. I'm like, look, there's less than half a percent of all traders have the ability to say, and let me go back to the profile real quick, to have the ability to, give me 1 second. I said like here, when J made a new low, took out G's low. If you took a short and used J's high as your out, nothing told you to get out of a short. That's from 418, we went down to 411. That's $7. We had a $14 range. That's half of it. Less than 0.5% out of 100% of traders would be able to do that. If you're making money on shorts on every push up and capturing some of these moves, that's very, very good. Okay? If you have the ability to hold on the entire way, God bless you. So, all right, let's go to the charts. We're going to start like we usually do with Russell. And I know this video is a little longer, but I think the circumstances of the market dictate it, and I hope you enjoy it. Russell, which always seems to be in balance forever, is now down on the monthly, right? Just came out of a 3-month balance to the downside. So remember, markets don't go bull bear, right? So look at this balance here. Tremendous balance. Bear. Balance. Back to bear. So on the next big level for Russell, for me, here is this line here is here for a reason. This is when they made an all-time high back in September of 2018 at 173.12. Well, look what happened after September of 18. They did not go back and make a high until November of 2020, 2 years later, and finally got legs. Look at that. Boom, exploded, right? Balance here, up and exploded, balance and out. So this is a critical level. Now, I'm not saying we're going to 173 first. Your next monthly low is 180.76, 181, whatever. So I would think that around that 181 level will be very important. But if you don't hold that, there's a good chance you're going to go test 173. So the monthly is down on Russell. Weekly, clearly down. Okay? And when you look at a weekly chart, I have 173, right? That as the high. On the weekly, that's not even a very visual point at all, actually. The really next big level for me on the weekly, so it's 173 on the monthly. On the weekly, it's more like 170 and then filling the gap at 165. So, pretty ugly looking chart. So the monthly's down, the weekly's down, and the daily. Now the daily's interesting. Yesterday's low is 184.71. Do you realize we had an outside day up yesterday? Well, today they took out today's high by 33 cents and came in $8. Now, did they take out yesterday's low? And did we close below it? Wow, look at that. Okay, I just realized this. We did take out yesterday's low, so they had a chance for an outside day down, but they don't. They close inside of it, so they don't have that. You can still call the daily balance in Russell. Okay, I would call it a 4-day balance. So the monthly is clearly down, the weekly is clearly down, the weekly is still balanced, and it just missed an outside day down. Now the outside day up, yesterday did nothing. Let's go to triple Qs. Again, we stretched it. Do we still call it balance? I'm going to call it down for now. We took out February's low in March, and now we took out March's low in April. And this one, we got down to 312.60. We took it out by $5. So I am now calling the monthly down. So we've gone from balance to down in the monthly for now. Weekly, clearly down. Now let's go back because at these critical junctures, let's see what our next big levels are. Remember, I think I had said 316. Well, I told the room 316 was an important level. If it doesn't hold, what our next level is? This low right here of 297.45. So right now we're looking at possibly another $15 to $16 to the downside on the monthly in the triple Qs. That would be my next destination. Weekly is clearly down. Right here, Guess what? Now that coincides with that monthly low, 297.45. Down on the monthly, down on the weekly, down on the daily. I'm not calling this balance anymore. They took out yesterday's low by a good margin and closed below it. So all three time frames are down in the Qs. And now let's go to SPY and ES. We have not taken out our balance low. February's low of 410.64 is held. So we are firmly in a 3-month balance. But boy, are we teetering. Now, because triple Qs and Russell came out of balance, does that mean we are? I mean, I guess the odds favor it, but that doesn't mean it has to happen, right? There's no guarantee it happens. But right now, balance rules are firmly in effect for the monthly balance, weekly. And let's go back. If we do come out of balance to the downside, remember what I told you when I gave the destinations, 404.79? Well, that's your next destination. But to me, really, I'm looking for like a big level what I think, would be a bigger one than that 404.79. And to be honest with you, I'm just looking right here, 372, 398. Here's the big thing. Remember, we had the gap. We have a 6-cent monthly gap. So to be honest with you, if we trade below, if we get acceptance, keyword, acceptance below this 3-month balance, I don't think 404.79 will hold. Now, we do have that large gap right below that I gave you. So that could be a stopping point. But I think eventually we'll at least go and fill this small little monthly gap at the 398.12 level, okay? So the monthly is balanced. Weekly is clearly down, okay? The weekly is clearly down. We have another gap here. When was that? From March 29th of 21? I don't know if I have that written down. I'm going to have to look. But that would be a next level here. Oh, yeah, that's the gap I'm talking about. Is that, excuse me 1 second. Is that the gap I was talking about? Oh, yeah, I'm losing my mind. That's a 271-point gap. So that would be a big level here. That's right below that 479 monthly low. If we get below that, this gap's going to be very important. If this gap fills, say goodbye to that monthly gap of 398.12. That would be history. And then we see where we go there. Okay? And then on the daily, so the monthly is balanced, the weekly is down, and the daily is down. So, pretty ugly week, pretty ugly month, pretty ugly start to the year for 4 months into it. Fed on Wednesday is going to be very interesting. We've had tremendous success in the trading room because we are really, really trying to lead all our traders, both experienced and inexperienced, through these volatile times. And these are volatile days, man. It's pretty awesome to get these ranges. So come check us out at camelbacktrading.org. I really appreciate the likes and subscribing to my YouTube channel. Rest up. Enjoy your weekend. And we'll speak prior to the opening on Monday.